Well, you're all veterans of this conference, so welcome back. Let me introduce you to the audience. To my immediate right, Jim Hopkins, the Assistant Deputy Minister of Provincial Treasury in British Columbia at the Ministry of Finance. To Jim's right is Lowell, Assistant Treasury Minister at the Alberta Treasury Board and Finance. And last but not least, Garry Steski, Assistant Deputy Minister at the Manitoba Finance Treasury Division. Let's start with you, Jim, because you do have the bragging rights on this panel of the best credit rating and the lowest borrowing cost. So tell us what's going on in British Columbia. What's the fiscal picture like in British Columbia?
Well, we're very lucky in having a fiscal picture which is just delivered its 5th consecutive surplus budget, and the new government that was elected in fall remains committed to fiscal discipline and is forecasting a new series of 3-year running surpluses into the future 2020-21. Debt remains affordable. We're beating our budget forecasts, which is typically always very favorably received by credit rating agencies. And the economy is expected by most private sector forecasters to be one of the leading economies in the country. So I think all that together has enabled the province to enjoy that distinction with the credit rating agencies. It's primarily, it's just focus on discipline and lacquering on contingencies, forecast allowances, so that when we do surprise, we're surprising to the upside. And basically, under-promise and over-perform is a standard approach to budget making in British Columbia.
Lowell, Alberta still has a distinction of the lowest absolute level of debt, certainly on this panel, I think. But the fiscal picture is a little bit shakier than it has been in the past. Tell us a little bit about the story there.
Certainly, the 2014-15 decline in oil meant a significant decline in revenues for the province, and we lost about $10 billion in revenues in 1 year, from year over year, and it's slowly coming back. But yes, we've been running substantial deficits for the last few years. Simply, we don't have the stable revenues that other provinces enjoy, and our economy, not just our revenues, but our economy will fluctuate with the oil and gas industry.
Garry, Manitoba, always in the middle of Canada on everything, geographically, demographically, and also debt metrics. What's the story in Manitoba right now? And actually, you also just released your public accounts just last Friday, so maybe you can talk a little bit about that.
That's correct. So the public accounts came out. The budgeted deficit was $840 million, and we actually ended up closing the books at $695 million, so an improvement of $145 million, similar to what we'd done the previous year. For this current year, we're projecting a deficit of $521 million. The government's put in a number of structural changes to focus on spending, and it seems to be working so far. From an economic standpoint, you're right. We continue to hover around the average of the 2% growth that we get, 1.8, I believe, for the current fiscal year, and 1.7 next year. Unemployment is low, and private investment is quite high.
Has the fiscal picture been improving over the last, since you issued your budgets earlier this year? What's the trajectory for the fiscal outlook?
Well, we in British Columbia, we produced our budget, our 3-year budget, in February 2018, and then we had a budget update, or our first quarterly report 3 weeks ago. And there we were reporting an improvement, better surpluses by about $900 million over the 3-year plan. So we saw better revenues than we were forecasting, primarily corporate income tax, personal income tax, and some commodity sourced revenue. Our debt affordability, modestly better than was projected as well, so that was good. Debt to revenue, debt to GDP. So The plan remains in good nick, I guess, in terms of how we forecast, and I think that sets us up well for the new budget in February 2019.
Oil prices are rising, so that's got to be looking a little bit better.
Absolutely. Oil prices have performed nicely in the market, and that certainly has helped our bottom line. Our first quarter update projected a $1 billion improvement in our deficit from 8.8 to 7.8 billion. So that's a significant improvement, and that's based on an assumption of $61 oil. Certainly, there's extra room to grow. We expect, if prices stay similar to what they are, that could improve by 1 or 2 billion more, in fact, by the end of the year. So certainly the trajectory is looking better than what we had projected at budget.
Garry, your province is less impacted by oil prices. What is the fiscal? What has the change in the fiscal picture over the last 6 months? Let's say.
Nothing significant. Stable and steady. We don't have any thing indicating that we would do anything other than the 521 deficit at this point in time, and we'll have to see how the rest of the year plays out.
We've had a major development on the trade front this week. This big uncertainty that was clouding the Canadian economic outlook has lifted. Is that in any way impacting, you think, your fiscal outlook?
Well, in British Columbia's case, we have less exposure to the U.S. economy in terms of trade. Only 50% of our trade is going to the U.S. So very deliberately, we've diversified away from that dependency. We have 35 to 40% of our trade going into Asia. Quite a deliberate strategy to minimize the volatility during rocky times. But for us, the settlement around NAFTA, while there's not specific industries that are immediately impacted, it's a great news story for Canada generally. I think it's taken away a pause for investors who might have been reconsidering their investment plans now with NAFTA, the new USMCA agreement in place. I think that's a very positive. I think it'll probably be helpful for the Canadian dollar as well. So we're pleased. U.S. and China, those tensions are not positive for British Columbia, not positive for the world generally. But I think the takeaway perhaps from the NAFTA closure is that it's possible that these trade agreements aren't stuck. They can be worked through. And perhaps that's the positive takeaway for the other trade tensions, and maybe they'll also come to a happy conclusion.
Lowell, your province went into the market. I guess the first provincial issuance after the trade agreement.
Second. Ontario went first this morning.
All right. Have you seen any discernible change in the way investors are looking at Canada because of this?
It's probably too soon to tell. We haven't seen a lot of change. It certainly is positive from what I heard. Some provincial spreads are tightening on the news, and the news of the new LNG project in BC is also helping. But I think on the NAFTA front or USMCA, it's a little too soon to tell and see a lot of movement.
We've seen, the one thing that we have seen since the announcement is a little bit of strength in the dollar. It's been weak along with most other currencies for a while versus the greenback. How do currency movements affect your strategy to your issuance strategy, your bond strategy?
Well, I think just like all the provinces in Canada, really, there's very few that I know of that are taking unhedged positions in foreign currencies. So we're all attracted. Certainly British Columbia, it would fall into this category as well as other provinces, and that is attracted to the offshore opportunities because it diversifies the investor base, it rations supply to the domestic investors. If you like, it keeps a bit of balance in terms of what those investors can expect by way of spread when they know that we have choices and we can go into these other markets. But in the case of British Columbia, we draw a line in terms of our diversification. It has to be economic for the taxpayer. So if we can do something better than we can do after having swapped the liability back into Canada, if we can do that better than what we could borrow on the same day in Canada, that's a positive signal for us to enter that market. So it ranges from year to year. Between 13 and 20% of our portfolio will be sourced offshore. And those have been great ways of, for the reasons I mentioned, great ways of diversifying, getting that better economics for the taxpayer. But they're not always available. And currently in this last year, for British Columbia at least, we've been quiet on the domestic market, to our lament, I'll say, because we like to be more active. We like to be more active, particularly in the dollar market, but the market economics just have not worked in our favor. So we've had to be patient, and we're here forever, and these markets will come around, and we'll be back in the dollar market.
Garry, you've been largely domestic as well this year, have you not?
That's correct.
Why is that?
So our program's about $6.4 billion. We've done about 4.3 of it already, and same reasons as what Jim has indicated. The arbitrage to bring it back into Canadian dollars just hasn't been there, and we do look at it as having to be cost effective relative to domestic funds. Last year, I believe we did closer to 40% of our funding in international markets. We don't set a target. We look for opportunities, and if we see them, we take advantage.
Lowell, you have tapped foreign markets this year. Yes. More than the others. Why is that?
We have a specific target to issue between 30 and 40% of our debt offshore. Much the same as what Jim was talking about. We believe that's important to maintain our domestic cost of funds within a limited range. We are borrowing substantially more than my colleagues on both sides of me. So we have a little different approach. We view the dollar market as a strategic market, and we try to get one or two issues into the U.S. market every year. We will pay up a little bit, not a lot. We won't pay up the 15 basis points that the market is currently priced at, but we will pay up a little bit because it's a strategic requirement for us. We've also done Euro this year, which was an important issue for us. Our first Euro public issue went very well received. And again, we're very focused on diversifying our cost of funds and our sources of funds.
And since you were in the market this week, what type of pricing did you see? How you know?
Well, I think the big news for Alberta is that we're pricing through Ontario's for the first time in a number of years. We've done a couple of deals now that have priced us through Ontario's, and that's been a strong signal. The domestic market, one of the reasons foreign borrowing is so expensive is the domestic market has been very favorable this year, and so the pricing in the domestic market has certainly been better than what we've seen outside of the domestic market, and that's great. I mean, if that's where the market tells you to go, that's where you go. Absolutely.
And why do you think that is? Why is there been this demand in the domestic market this year? Any theories?
Well, you know, there's a core sustained strong demand for bonds in Canada, pension plans, life insurance companies. They're obliged often to. They have to keep issuing. They can't, and they have to. They're often takers. As the markets have opportunities on offer, they are going to be in there to hedge up their positions in their portfolio. So there's rarely ever a shortage. I think of demand. I think what is to the credit of a province like Ontario and really to Alberta as well is that you can't flood the domestic market without all of us seeing spreads widen. And so these provinces, to their credit again, are very judicious in that they appreciate that, and so that they do go offshore, and they may pay up a little bit in order to make that happen. But at the end of the day, they get rewarded by seeing the levels that they issue at home as good competitive levels, and we provinces who may not be as active offshore are seeing the benefit of that as well. So it's the appetite among domestic investors for domestic product is it's not bottomless, but it's definitely deep enough to accommodate the provinces.
Bank of Canada is raising its rates. That's got to be on your radar. The expectation is as many as 4 more rate hikes over the next 12 months, at least 3. How is that playing into your issuance strategy?
We, in Manitoba, we have about 10% of our debt in floating right now. I think the Bank of Canada and the Fed are a lot more transparent these days about their intentions. So, if you decide that you want to strategically change that, obviously you can, and we do from time to time through derivatives. But for the most part, we budget for potential increases by the Bank of Canada when we do our budgets, and so have some kind of mitigation effect through that.
Well, for us, we've certainly focused more on 10 and 30-year debt this year than perhaps in other years. Typically, in the last few years, our target has been roughly 1/3 in 5s, 1/3 in 10s, 1/3 in 30s. And while we've done some 5-year debt, it hasn't been a focus of ours. So we're lengthening the duration of our portfolio ever so slightly, but doing what we can with that. And we've taken our floating exposure and reduced that as well.
And for British Columbia, we've been hugely attracted by these low interest rates and have been extending duration. 10s and 30s have been our main term for issuance in the long-term markets. But to your point, Theo, I think if there's going to be a consistent rise, a sustained rise in interest rates, we may revisit the duration in the future and start looking to shorten our duration. One day, it's hard to imagine it, but one day, maybe 12, 18 months from now, we'll be speculating as to when the next decline, when will be the next cut in interest rates if the Fed is as active as they talk about. That may not be off the table. And in that environment, as an issuer, I would say that we may then revisit our duration, and we may actually start shortening it up and be looking at and be open to doing 5-year issuance. Whereas in the last 3 or 4 years, you haven't seen province of British Columbia in that term at all. We just have always seen the 10 and 30s as being the most attractive and the right term for us.
Okay, let me ask you some kind of local issues in British Columbia. Obviously, everyone has their eyes on Vancouver's housing market. If there's I should ask the question this way: how robust is the province's finances to a sharp correction in the Vancouver housing market?
Well, we've enjoyed in British Columbia. We've enjoyed in the last 2 or 3 years growth of 3.5–4% growth in GDP. We've had retail sales growing at last year at 9%. The year before at 7.5%. Some of that, for sure, has been driven by a very active housing market. Housing starts are well through our average. Like 30,000 units would be an average. We've been producing 45, 46,000, and we're still running at around 42,000, still well above the average. We do have certainly, there's probably about 20% of our GDP is coming out of that, generally that real estate sector. So it has there's an exposure, if you like, to the sector for sure. But I think you have to sort of scrape below and understand why is it? How does this come about? How does housing feature so significantly in Vancouver? Vancouver's always been, in British Columbia, has always been the most expensive real estate market in the country. More recently, there's been, as I say, strong GDP growth, employment growth leading the country, 4%. The disproportionate number of immigrants, when they come to Canada, they locate in British Columbia. So there's another bid to real estate that comes from that. Low interest rates as certainly another bid for real estate. So, but it is built on fundamentals, economic fundamentals, not on. Certainly there is some speculation in the market. The government wants to moderate that. I'll tell you that, but that is not what's fundamentally pushed it to this level. So it's it means something to the economy. There's no question of that, but it doesn't define it. There's been a lot of other activity that has driven British Columbia. The high-tech sector is huge. Tourism is big. Manufacturing is a sector that is growing in British Columbia. The service industry, our economy is much more service-oriented than other economies. 75% service-oriented, so we're not as vulnerable to the commodity fluctuations as some provinces are. So it's not the only story that defines our growth story.
And the LNG Canada, how much of an impact will that have on your
Well,
business?
I don't know if some of you picked that story up this morning, but a Shell consortium called LNG Canada. So they're the leaders of the consortium, but they have Petronas in there. They have partners from Korea, China, Japan. They this morning announced a final investment decision into the LNG market. It's been an announcement, a project that this new government's been working on since it really got into office. And we, as a province, have been working on this for probably 8 or so more years. Anyway, they announced this morning a FID for a $40 billion investment into the LNG business, which I understand, listening to our Prime Minister quoted, is the largest investment in Canadian history. So it's a huge win. This is 2 days in a row, NAFTA and LNG. And I'll say that BC is certainly a winner here. We're going to see some significant revenues that will come from the LNG project, but Canada will win big time. Alberta will see a lot of the benefits. Manitoba, your people could very much be a part of those jobs. 10,000 at the peak of construction. Expected $22 billion in revenues that will come for it, not all to British Columbia, but and I'll say that this is all to the upside. In the case of the province, this is all to the upside. Those numbers aren't baked into any of our forecasts. So it's a good one. And the other, talking too long here, but I'll just say the other neat thing about this project is that it's married up big business, big dollar investment for sure, but also social license with First Nations, with environmentalists, and made all those sort of ingredients come together. So everyone sort of at the table is sort of happy with the outcome. So it's a neat one for Canada. And I will give Canada a lot of credit in having helped us with the tariffs on steel. They gave a waiver on those. That's helped the economics for Shell, and I think helped with the final investment decision. But the government in British Columbia did a lot to get that across the finishing line. So we're pumped.
And in Alberta, Lowell, that it's all about oil, or is there anything else that could fundamentally change the fiscal outlook for the province?
Oil and natural gas are big stories in Alberta. There's no doubt about it. Our economy depends largely on that. The government has implemented economic diversification programs, but those take time to see effect. We're seeing investments in the petrochemicals industry. A lot of our natural gas plays are rich in natural gas liquids, which lend themselves to petrochemicals very nicely. We're seeing economic activity in the digital media sector through tax credits there as well. When the oil prices went down, all those engineers that were working in the oil business didn't just sit around and twiddle their thumbs. They did what engineers do and create new things. And so we're seeing small business growth in Alberta, and it's very positive. But diversification takes time.
At what price will the price of oil start fundamentally changing the fiscal outlook of Alberta? At what point, at what level of oil will you start seeing, Alberta's budget balance coming earlier to 2021 or 2022?
Well, I think if prices stay at levels similar to what they are now, we're certainly going to see the budget balance sooner than the current projection of 2023-24. How much sooner? Well, that depends on how high oil prices go. But you know, the government's certainly taking steps to try to reduce its reliance on oil prices to balance the budget. It's taken significant efforts on controlling expenditures, and it has introduced new tax measures when it first came in on the income tax side. And so, but I don't know that there's a specific oil price target that brings that together. There's so many variables.
Garry, last word. What's the biggest risk to the Manitoba economy?
Can't point to one. It's very, very diversified, and as I said, steady and stable growth, and that's our claim to fame in Manitoba.
Okay, thank you very much, gentlemen.
Thank you.
Thank you.